Okay, recording this video after close of trade Monday, the 11th of July 2011. Well, go away for a long weekend, come back, and everything has changed. Potentially now we have this kind of bombs away scenario on the cards. We have to hold tomorrow, or else there's kind of nothing stopping us continuing on down. Just seeing a lot of confluence in my charts with the risk on and risk off charts all moving in particular kind of sync, and I don't see how the equities markets is going to escape this. Also got Thursday, Friday's news on the unemployment participation rates out of the US was very disappointing, and now in Europe, we've got talk of sovereign bond problems in Italy. The contagion scenario is potentially on. Let me just show you what I'm seeing on my charts. First of all, just recapping, this is daily chart of the better sine wave indicator a couple of days ago. So this was Thursday's activity where we burst up through this resistance level up into the 1350s. And we formed an exhaustion kind of pattern here, and then Friday's activity with the bad news was followed with Monday's activity, kind of strong range bars down. A lot of the activity on Friday happening kind of pre-open, and then Friday was kind of fairly difficult kind of range bound market. Monday's activity was great. We had a really kind of nice kind of continuation of this downtrend move, but it now means that this cyclical resistance level is pretty much confirmed here, and we're on our way down till we start to form a cyclical turn at the bottom here. If I look at the lower time frame chart here, this is the 45-minute chart, and I was talking about this, how on the lower time frames you see trend moves ending equivalent to cycle moves in the higher time frame. So the lower time frame equivalent to a daily chart is a 45-minute chart here, and you can see here we had that nice end of trend warning signal kind of print before the activity on Thursday into Friday, where we kind of collapsed, gap down, kind of tested back up, and then with Monday's activity we've fallen through support here, so potentially we're in a downtrend. I think we might get caught a little bit at these levels tomorrow initially, but and any testing back up will be the clue. If we start to test up and that fails and then we kind of keep on going down, then it's really all over Red Rover. If you look at this on the trend indicator, so this is better X trend, where I'm just trailing a stop based on exhaustion volume. You can see here that this is kind of the critical level just above 1305. So this move kind of really got going back down here at the 1260s, where we had this red up bar here, which was kind of an explosion in buying volume, and then this move kind of finishes with an explosion of buying volume. So this is kind of the professionals getting into the move, and then this is the professionals convincing the amateurs to get into this move and kind of selling out as we make this kind of topping pattern. We've now come down to the lows of where that kind of explosion of buying volume took place. So if this is professional buying at this point, kind of getting this market going and continuing on, you would expect the professionals to pick it back up at these levels and push it even higher. So we potentially could hold this support level if the professionals come in tomorrow, hold these levels and continue on up. However, if they've kind of run out of steam and this is actually professionals kind of exiting at this point, this low will not hold, will break through support here at 1305 and continue on the downtrend. If you look at it in terms of trend lines, here we've got these automatic better trend line indicators. You can see here we kind of had a fake out move up to 1350, and we've closed back inside the congestion zone with this white bar here. It just shows we're back in congestion at this point here. So if that's a false breakout, then it means the next place we'll kind of test is back down to the trend line at support here, and then if that doesn't hold, we'll fall through there into a real kind of strong downtrend move in that direction. So tomorrow's activity is going to be absolutely key. In terms of patterns, I was talking about this last week, this fake out move, more kind of confirmation that potentially that was a false breakout, is that those last couple of days leading into that 1350 levels were Rambo patterns, a reversal of an amateur breakout. So you're looking for the lows of those bars to be broken to show that that was activity being led by the amateurs buying those new highs, and potentially it's a false breakout. And then when you back it down to, we had the data for the end of the week. So last week ended up being a no demand week back up here at 1350. So kind of more evidence that that might be running out of steam. The hypothesis chart now, although we did kind of push on way past where I thought the pullback would go to, is looking a little bit better. And then lastly, if you look at all of the kind of risk on and risk off charts, they're all starting to move in sync in a particular direction. So, the worrying one is euro. We're back down at 140 versus the US dollar here, and you can see, this was this explosion of selling volumes. Rush for the doors here. Professionals selling right here at the highs in just close to 150. We come back up to test. No demand. Rambo patterns here at cyclical resistance. Come off again. Professionals pick it up here at this cyclical support level, come back into another cyclical resistance at 145, 146. No demand. Amateur bar right at the highs there, and we sell off here. And you can see we've got a blue professional bar kind of come in. Quite extreme selling at this point. A little bit of, we've got a ways to go, a few more days to go to that cyclical low. So, and we've got this kind of wedge pattern here. We've got support at 139. Looking to hold with kind of lower lows being made. So 139 doesn't hold, we'll have a very strong move on the downside, and you can see the flip side on the dollar index. Looking at crude oil, we've got this cyclical resistance kind of coming in. We've had bearish divergence been formed and so on. So maybe this end of trend was the end of this move, potentially a downswing now on better sine wave here. Copper was the strongest move here. It kind of overshot the resistance level, but again, a note that the bars that were pushing up to that resistance level were amateur bars and Rambo patterns. No demand up here, and we're now kind of swinging back down, potentially below the lows of those kind of breakout bars. Aussie Dollar has been one of the strongest currencies, but again, similar pattern to euros. So each of these cyclical turns, this was an end of trend, but amateur bars here. Next cyclical turn at 107 up here in an amateur bar, and it came with exhaustion buying at this point. So the bulls ran out of steam at that point, and so we've got this downswing playing out in Aussie dollar. Gold, we've kind of tested back up. We're coming up to a cyclical resistance point, but we've had exhaustion buying. So, gold will be, counter a US dollar move. So potentially this is kind of rolling over. And then silver, same deal. We got this cyclical turn kind of lining up, and we had, silver looked pretty weak after today's activity, kind of closing down to 35s. So that's all the risk-on trades. In terms of the risk-off, the kind of mirror image, this is dollar index, mirror image of the euro. Very strong day, and this is this kind of wedge that I'm talking about, higher lows being made here, and then each time this was this explosion of activity where the professionals kind of rushed for the doors to cover their shorts, came back in to test Rambo patterns, no supply, cyclical support down here. We test again bullish divergence patterns here, amateur bar right at the bottom, cyclical support, bang, and today we're just itching to break through up to 77 and beyond. So let's see if that continues. And on the bond contracts, again, these pullback levels and trends have held. So pullback in an uptrend on the 5-year, professional activity coming into here, exhaustion selling at this point. Everybody was talking about how that was a huge move during that week in the bond contracts, but it's held. Amateur bars at the lows, kind of trying to sell the lows, and we've kind of tested back up. This cyclical resistance is holding. 10-year, same deal. Pullback in an uptrend's held. Amateur bar with exhaustion selling at this point's held. Kind of gone the other way. And then the 30-year contract. So it wasn't a pullback in an uptrend, but it was a cyclical support here. You can see professionals pick it up. Amateurs kind of getting wrong-footed, exhaustion selling on the downside, and we've kind of gone back up to test new highs. So all of these are kind of starting to, all the risk-off trades markets are starting to move in sync into an uptrend, and all the risk-off trades are starting to move into a, kind of a synchronized down move. So I don't see how the equities market's going to kind of reverse that. I mean, we could have a little bit of strength kind of coming in tomorrow, but the next couple of days, absolutely key. In terms of long-term tip bar charts, 40,500 tip bar charts, this is the activity Monday, Friday, and Thursday. So the Thursday's activity ended up being end of trend warning signal here, Rambo pattern right at the top there. Bearish divergence kind of weakened, and on Friday the support level did not hold, so we're kind of below support here. Blue professional bars have come in and picked it up during today's activity, so potentially we could test back up, but around 1330, if we kind of make it to here, support becomes resistance, we could easily kind of turn away and kind of break the lows again. In terms of day trades today, had a really nice couple of day trades for me. I was kind of picking off this pullback in a downtrend. So on the 4,500 tip bar chart, we were in a downtrend. We'd broken below support in the pre-open after hours on Sunday night into Monday open. We kind of kept on going, had a little bit of support at the open with the professionals kind of picking it up, but as soon as we came into this pullback level, found resistance here, bearish divergence, and we kind of sold off. And professional blue bars initially kind of come in, and this end of trend initially kind of seems to hold with exhaustion selling, but we don't have enough divergence to hold this. So the divergence kind of patterns came in, and when seemingly the down move might have been over, we get this rush to buy the lows, ends up with an exhaustion buying at this point, coming into cyclical resistance, and then as soon as we get these bearish divergence, we kind of test back down to these lows. So a lot of professional activity at the end of the day. If we look at 1500 tip bar chart, just at the open here, we had this pullback level. I was actually getting short at 24.25, just around here. Had to sit through this retrace back up here, but it did work out in my favor. As usual, got out too early, got out at 21.25 with only 3 points, but then kind of re-entered to get another 1.5 on the way down at 21.50 down to 20. So, and then on the 500 tip bar chart, you can see this move here. So after the open, I was getting short around here where we had exhaustion buying, blue professional bars. Should have been waiting to get into this move here after we had more divergent signals and flush patterns, and you can see that up at 28 to 26, 27 up here. All these blue professional bars taking profits, going into that high Rambo pattern, bearish divergence, finally a flush signal here, bang, and the market kind of takes off to the downside. And then the first kind of level down to get out is at this end of trend, flush signal kind of down here, in the 1320 type levels. So that was kind of today, the day that was, and just really going to be interested tomorrow's activity, the next day's, Tuesday, Wednesday's activity, because potentially the downtrend is now kind of fully on. So let's watch this carefully and hope you traded well today.